All right, gang, welcome back to the live room. How's everyone doing today? Can you guys hear me? Just made it back in the nick of time today. I got a kid who's he's halfway through potty training, I guess you can say. So we're trying to get him to do some stuff, and he decided to do it literally like 2 minutes before the live room started. He decided to finish 2 minutes before the live room started. So had to do some cleanup, rush down here, but glad I can make it. And glad to be with you guys again. I've been away for a little bit, so it's good to be back. Cody says, same boat with daughter. Yeah, it's like, man, like I had him. He's got one down, Cody. Two is still an issue. We had him on there. He's been on there since like an hour, since 7:00. 7:00 or like 6:45. And then finally, like 2 minutes before the live room starts, I did it. I'm like, oh, okay. And then you guys know the cleanup duty is always a struggle, but yep, gotta love it in their own world. But welcome back, guys. Welcome for you guys watching on the live stream, TradingView and YouTube. Typically what we'll do here is give you an inside look at the New York live trading room. We have two trading rooms over here at Tier 1 Trading, the London session and the New York session. I do the New York session because I'm based in America. My partner, Jason Greystone, does the London session. He's based out in the UK. And usually I show you the best trading idea that's on my radar for the day to come. We're in a little bit different conditions right now because I don't really have a lot of interest in the market. If you've been out of the mix for a while, there's some conflict happening in a certain place or places of the world, which is causing a unique, some could see it as a unique opportunity in the market from an investing standpoint, but unique circumstances in the market. And this is one of those circumstances where I don't really have any interest. So I like keeping my powder dry until things have kind of come back to normal. So what we're going to do instead here for the first trading thing of the day, instead of my top idea, I'll have someone here on YouTube on TradingView. Of course, one of you guys here in the live room, shoot me a trading idea. Shoot me if there's something that you had on your radar or something you had questions about, something you wanted me to look at. We can review that chart. We'll kick the live streamers out and see them tomorrow, and then we'll continue around the market. So if you had anything you wanted me to take a look at, shoot it in. Let me know. I'll give you guys a few seconds. I know there's a little bit of a delay, and we'll take a look at it. Economic calendar, just to give you guys kind of a look at what's on the radar for the week. We have GDP coming out today for Canada, ISM for the US. Again, all this is going to be kind of secondary to the bigger things that are going on. Tomorrow, however, just to put it on your radar, Canadian interest rate hike tomorrow. So remember, this is something that we thought the last time they would do a surprise hike, and they did not. They held steady. This time, they're going to hike. So just to put that on your radar for tomorrow, we also have Jerome Powell, our U.S. Fed chair, testifying at the same time tomorrow as well. So around that 10 o'clock time tomorrow, we got some important news coming out. This is also the start of a new month. It is the first week of a new month. So you guys know what's coming. What happens first Friday of every month? Most first Fridays of every month. There's every once in a while there's an odd one. Yep, we have non-farm as well. So just to kind of piggyback on everything else that is happening, this is a jobs week in the market as well. So of course, with non-farms on Friday, we're going to see unemployment on Thursday. We're going to have ADP on Wednesday. So all of these precursors kind of leading up to the payroll event, which again is going to be secondary in comparison to the other stuff that's happening in the market, but still something that we should have on our radar. All right, so let's see what we got here. Cody says dollar Canada, interesting daily support zone. We got a few things over on YouTube, Aussie Canada, pound dollar. And Justin says Bitcoin, potential 4-hour bet. Maybe we'll do Bitcoin, Justin. We haven't looked at that in a while. So let's start the dollar Canada. That daily cipher played out. And then David says Euro Aussie at structure. Okay, let me write this down then. Give me a second. I'll write this down so I don't miss, because you guys know me and my memory. It's not the greatest. We're going to do dollar Canada first. We'll give the live streamers kind of a double. We'll do dollar Canada and Bitcoin just because we don't really look at a lot of crypto stuff. And we looked at Bitcoin a couple months ago. But let me write this down. Apologies, I don't have my normal setup going here. But let's do USDCAD. Then we'll do Bitcoin. Then David says Euro Aussie. We had someone on the live stream say pound dollar, although you'll be gone by the time we do that, so I apologize. And then Aussie Canada. All right, so let's go to dollar Canada first and foremost. Let's start there on the loonie. Let's take a look at the daily and work our way down. I did look at this morning, Cody. Again, going back to, if you guys have been following this live stream video, we're here in the live room for a while now. You remember Canada was the pair that had what, like 5 ciphers on it at the same time, right? With the bearish one completing like this: X to A to B, B to C, and C to D right up here. I'm not sure if it ended up hitting targets or not. We shall see when I bring my Fibonacci's out. But we've been seeing a lot of this. Yep, indeed did hit targets easily. We've been seeing this a lot in the market, especially with the ciphers, the bats, and the Gartleys on the daily time frames. This kind of chop back and forth has triggered a lot of these pattern formations. So it's been really good for traders on the daily specifically. I don't know about the lower time frames, but the daily specifically recently with these pattern formations. So nice bearish cipher here on Canada. Daily chart, and as Cody mentioned, right, we have retraced off of that completion level. We have come right back down into a previous level of structure support, right? You can see recently price has hit this level once, whoop, twice, whoop, thrice, whoop, and now what would it be the 4th time? Thrice? I don't know. I never made it after thrice, but for the 4th time here. And of course, if we extend this level looking left, right? Look left, structure leaves clues. One of the most important statements that stuck with me from my trading mentor, one of my trading mentors, was that we've got consolidation all in the middle here as well, right? Consolidation, looking left. You can see this is a pretty decent zone. I don't know if Duncan is in here today, but if you guys remember the last live session we did last Thursday, where we turned it into a Q&A, we had that discussion on different levels of structure. Duncan ended up following up with me later in that day and explaining in more detail how he analyzes structure as far as levels of importance and zones and stuff like that. And this would be a key level that he would be looking for as well. So going down to the 4-hour time frame and lower. And again, I apologize if it's a little bit slow. I've got YouTube up on the main computer today instead of the kind of the side piece. Price action is trading at this previous level of structure support. If you're looking for a buying opportunity, this is going to be the zone to look for it at, right? Price is currently consolidating, so it's making up its mind. We're probing, not the lows, we're probing the zone. For me personally, I would love to see a probe of the lows. We got a little lower to go, but we're probing the lows. We're starting to consolidate, so the market is starting to have that battle between buyers and sellers. Now, again, buyers doesn't necessarily mean people that are buying. It could be sellers getting out of it and vice versa. But the market is stalling a bit. Now, speaking of patterns, right, because we talked about the cipher sell on the daily chart that worked out nice. Yep, there we go. I was waiting for Bobby to come in. Right on cue, Bobby. Yep. Also, a potential butterfly pattern here, right? And again, this is working really slow because I got YouTube up on my main computer and a million other things streaming, so I apologize for that. But hopefully it's not too bad on your end. But if we look at this formation like this being our impulse leg, swing low to swing high, being our X to A, this move down here being our A to B, this move back up here being our B to C, and our move down here being our CD completion. Give me 1 second, guys. I need to get my laptop loaded up and get this YouTube over here. So give me 1 second. Hold tight. Because this is annoying me. It's going way too slow. So I got to shut YouTube down here. I apologize. I'll keep talking YouTube, but I won't be able to see the messages for a little bit and load it up on my other device. Again, I don't have any interest in trading, so I didn't bother to put my laptop on this morning, which is where I placed my trades from. But I'll load it up for the YouTube. But you can see a butterfly pattern completion down in this area. Now, again, where that butterfly pattern completes at depends on how you trade butterflies. If you're someone that takes the 127 Fibonacci extension, right, you can see that we're hovering right above that level. If you're someone that takes, say, a 127 Fibonacci inversion from A back to X, so a backwards extension, essentially, you can see that level is going to be a little bit lower. So depending on where you or how you identify pattern formations, this particular pattern formation, I should say, that's going to dictate whether this butterfly is also in your zone of completion or not. And even if you're not a pattern trader, right, patterns could be used as part of your CTS score, right, your combined technical scoring system, which is basically a way that we quantify trading opportunities. So you can look at this as a previous level of structure, which would give you a point. You can look at the advanced pattern formation being present down there, which can give you 3 points. So you can build it, even if you're not hey, I don't specifically trade butterflies, it can still be used as something that gives you or something that helps you build a case for entry, as we often see. Cody's rooting for Oriole. I was telling that who was I talking to the other day, Cody? Because we've got we invested in oil around the same time, and I was telling I think I took my kid to the barber shop, and I was telling my my barber about how I sometimes feel bad about being a trader or being an investor, because in a way, and we're talking the whole thing about like people winning and losing and how the market like is manipulated and stuff like that. And how everything in the world, someone's making money off of it. And I was like, yeah, I told him the example about how, I've invested in oil since kind of early COVID or mid COVID. Oh, I don't know. We're still in COVID. So mid first year of COVID. And, part of me was, I don't want to say I was rooting for a war, but I knew that if it actually happened, I knew that the results would be very beneficial for me. So I'm like, sometimes you feel kind of bad, because it's like you don't want something to happen from just a normal, just a human being perspective, right? But at the same time, if you benefit from it, it's kind of like, hey, you don't feel as bad about it. And it's this rough kind of moral conundrum to be in. But then you justify it because you're like, hey, like this thing's going to happen whether I have a position or not. So if it's going to happen anyway, I might as well have a good position in it. But you can see kind of the moral dilemmas in there that can exist as an investor. And that is... it's not talked about too often, but it probably should be something that is talked about, right? Where do your morals lie in your investments? And you can, I guess, a better example, not to get too far off topic, but what if you're investing in a company that just does like these unethical things, right? You've got let's say Apple, for example. Let's say Apple. It turns out that Apple is using, child laborers to mine for blah, 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 right? And you're 100% against that. But you've got a position in Apple. Like, where is that line where where do you draw that line between, hey, this is a great investment opportunity versus I don't want to support this company because of what they do. And that's I guess it's going to depend on your moral scale, and everyone's a little bit different on that. But that is something to take into account, because I do think you need to draw a line with stuff in life in general. But that's something that a lot of investors don't take into account. We don't really talk about it, mainly because I know where I stand on that line. But something to consider if you guys are going to be kind of investing in different things out there. But it is interesting. It's my opinion is this, Orsi, there's enough opportunity out there that you can, there's enough opportunity in there that you don't have to kind of sabotage your moral well-being to make money. But everyone's in a different position. If you would have asked me that question when I first started off as a trader and I had, minimum money and I'm looking for some, if there's a cheap company I can buy that I can make a buck off of, I probably put all those morals to the side and all those ethical values to the side. I'm probably just like, what can make me the most money? So I think it does change over time as you get more flexibility to do things, right? It's tough though. It's tough, but it could be a dilemma while you're in a position, because it can mentally haunt you. Trust me, it can mentally haunt you to the point where you feel bad about yourself, and where you start to really sabotage your success, because deep down you don't want to be successful because of where you lie on that scale. So it is interesting. Real quick, Chris says, I just learned how to trade the butterfly from the mastery course. Do you trade this pattern, Akil? Because it looks like it violates your structure philosophy. I do not. And that is the reason I don't trade it. I would say this, though. From a psychological standpoint, the butterfly pattern is the pattern that makes the most sense to me, right? What you're playing is an exhaustion. Now, again, how you play, it's a whole different story. What you're playing is an exhaustion. So essentially is this, right? So the structural integrity that is broken from the butterfly pattern is the X leg, right? Right? Everything we're taught is, and this one technically doesn't break and close below it, right? But everything that we're taught is that, if you get a higher high, higher close, if you get a violation of structure, we should project that price is likely to continue in that direction. So what's weird about the butterfly pattern is the fact that we've broken that level, and then we're looking to, in this case, trade it back up, where our analysis should say that we're likely to trade it down. Again, just ignore structure, just look at the pattern in its own right. The thing about the butterfly, which I understand about it, and which is why I really like it, is that it is a relief pattern. So you think about, break down some butterfly psychology for you guys real quick, right? So think about, if you are a buyer, right? Let's say you're a buyer here, and you buy, right? We get the structure, we start breaking structure, even more buyers are involved, right? So what eventually happens to the buying pressure here? Does it continue to get stronger, or does it get weaker? Right? You've got some buyers here. You've got some buyers here. At some point, there's going to be exhaustion. Like the same thing in any type of trend, right? At some point, a trend exhausts itself, meaning that there's less buyers interested because the price has gotten high enough where it's no longer a bargain. And previous buyers are starting to become what? Getting a free lesson here, YouTube and TradingView. Take notes. Do me a favor. I'm not going to charge you for it, but if you can hit that like button, that will count. If you pound that like button, that will count as payment for this free lesson. Yeah. Previous buyers become sellers. Why? Because they're taking profit, right? They're probably taking profits from here. They're probably taking profit at whatever they deem to be the exhaustion point. So you get a little bit, just like in any market, you get a little bit of relief, right? Something goes up and then it must come down, right? You get a little bit of relief, and then the market either completely reverses or continues on its way, right? Depending on the overall picture of the market, right? So the butterfly pattern is basically you playing that exhaustion, you playing the exhaustion from the breakout and capturing the relief. Now, so psychologically, it makes sense. Now, technically, the problem I have about it, and it's not in this case, but in many cases, right? If we're selling the butterfly up here, because structure is the main component of my trading backbone, the question is, where do I put stops? That's the biggest thing for me. Now, in this case is easy, right? You got a big old level of structure that you can easily put stops below. So Bobby's like, duh, right below here, no brainer. But not all butterflies are going to come in situations like this. Some are going to come in the middle of no man's land. So when you have a butterfly in the middle of no man's land, I don't have a way to justify putting a stop loss on unless there's previous structure. And in the majority of cases, there aren't previous structure. Now, I would also tell you this: with the success rate of the butterfly, and you got to crunch the numbers. The win rate of trading it back to structure, X leg, right, versus trading it back down to like a 3D2 is much higher. Now, you do sacrifice, obviously, profitability. But if you just think from a structural standpoint, right, where's the first place we would think price actions would come to? Previous resistance turn support. So that's something else that needs to be taken, that could be taken into account. But yeah, so I like the butterfly, believe it or not, out of all the advanced pattern formations, is the one that psychologically makes the most sense. Like, I understand exactly why it completes, how it completes, where it completes. It just doesn't work with my technical philosophy. the majority of the time. Yep. So that's good question. So it's not a bad pattern by any means, and I don't want you guys thinking because Akil doesn't trade it that it's a bad pattern. Like we said before about like investment options, I've got plenty of other options to trade, so I don't need to force something in there that kind of bothers me a little bit or doesn't give me the opportunities that I want. So yeah, Cody, good butterfly, or Bobby, good butterfly down here. Cody, good level of structure. We go down to the hourly. You're going to see this battle a little bit closer, right? You'll see this consolidation happening down here. And like we always talk about consolidation, again, we do have room to push lower. So, if we put a mark right here, this is our low water mark of previous structure support. So we could push lower here. But what I always like to do in levels of consolidation or, channels and whatnot is I bracket the two levels, right? So I find our low right here. I found our high right here. Now I can already tell you I'm not interested in any breakout to the downside because of what? We have that other level of structure here, right? So is there any opportunity in a break? I mean, aside from like a lower time frame, is there any opportunity in a break of 126.50s? No, like we're just going to go to 126.30s, right? So the part that would interest me is if this level of support holds, and if we can violate this level, if we can violate this high right here, this is the high of our double bottom essentially, right? If we can violate this level, then I would project a move higher. And that's where the opportunity is going to lie. For me personally, I'm a pullback trader, so I would need a violation and a pullback. Of course, if you're a different type of analysis, let's say we do start consolidating here, maybe we get some signs, right? You could look at candlestick formation, you could look at volume price analysis, stuff like that. Excuse me, signs of a potential breakout up here. And just like any breakout, you can position yourself in advance of it and trade the breakout. So yeah, I think this is a decent opportunity on Canada. I like this mesh point, Cody. I think if we can get a violation of this mesh point or some type of sign that we're more likely to break to the upside here. Again, a tight consolidation around the tops. I think it's got good opportunity to the upside. Yep, 26.18 as well. Yep, it would be a perfect example of a 26.18 trade. So a double bottom where you're not interested in the double bottom, but if you get confirmation of that violation, then boom, you're in business. Yep. Ryan says, how would it work psychologically with the other patterns? You got me on that, Ryan. Butterfly is the only one that I get psychologically. Now, I know the other patterns. I know why they form as far as like the buying and selling habits of not always insiders, institutional traders, but that has a lot to do with it. But as far as like the psychological version of it, you got me, right? Because it's just a structure. It's a hold of structure. So you got me on that. I don't know. Yep. That I do not know, but the butterfly does make sense. All right, let's go to Bobby said this is the rare example where you have structure depending on how you take the decompletion. Yep. Yes, it is. Yep. Neighbor stopped me yesterday. Old Indian guy asked should I buy the ruble? I'm like, don't ask me. don't ask me if it's low. Might be smart. Oh gosh. All right, let's move on to. I said Bitcoin. We got a request on YouTube for Bitcoin, so we'll do that. I think it was BAT on 4 hour. We mark down that what time are we at in my recording? We're at 23 minutes. We'll jot that down. Let's head over to Bitcoin, and we'll start in the daily and go down to the 4 hour. I haven't looked at Bitcoin probably since the last time we looked at it here in the live room. And the BAT on the 4 hour, it's probably inside here. There's a little bit of delay. Who wrote it in? Justin? I can see on YouTube. I'm not even over there. I just got over to Bitcoin. Here we go. Probably in here on the 4 hour. But depending on how you take an X leg, you may have another BAT as well, right? If you're looking at this as an X to A, swing high to swing low, and we bring our Fibonacci out, and we'll talk about Bitcoin from a price action perspective too, but just to start on patterns. If you have this as an X to A, then you've got a potential Gartley too, right? You've got wrong tool. You got an X to A leg. It's your initial impulse. You've got an A to B. Tickling that 618. We've got a B to C down here. You're going to have a CD completion somewhere between this 786 and that 886. So you got a nice little potential Gartley there as well. Just from a price action and structural perspective, right? If we do our IPDE, right, where is Bitcoin approaching? We are approaching a previous level of structure, right? So I would expect there's some sort of battle at this level. Again, you look at the mesh point that happened here. These things aren't going to be perfect, right? The market isn't. Maybe in like the YouTube courses, everything's perfect, but in real life, they're not. But you've got a spike of support right here. You've got a zone of support right here. Again, a zone of support that held right here. Support was broken, right? Immediately it became resistance, right? And now it's resistance again, right? So this is a pretty significant level of structure. So if we violate this level, a good sign that we're going to attack, or we should attack, the next level of previous structure. So even from just a price action perspective, kind of the same thing as Canada, right? And this is why if you can understand structure, you can be pretty decent at making predictions on where price is likely to go. If we can violate this level, we're likely to continue higher to this level. So that's something that we can revisit in the future if we get that break. But at this point, what you would do is you'd write it down in your notes. If you have like a pre-market checklist where you identify the major level of structure at Bitcoin, you identify that we're near it, and you start writing down your if-then flow chart, right? If hold, then this. If break, or if violate, then that. And then prepare. But going down to the 4-hour, and let me know, Justin, if this is the bat you're speaking of. Ooh, something else here, guys, that you see. It's a beautiful one. Oh, baby. But I'm guessing this is the bat that Justin's seeing. You can let me know if I'm wrong, Justin. X to A to B, B to C, and then C to D. But yeah, beautiful head and shoulders. Oh, look at that. Delicious. Left shoulder, head, right shoulder. Your violation's right here. Now, the reality of this is that it just violated right away. So it never looked back. It never looked back. So there's a difference between this being a beautiful head and shoulders and a head and shoulders that you actually could have traded, right? Probably wouldn't have been able to trade it. Obviously, in hindsight, you could be like, oh yeah, Kilo would have done this. Unless you trade the breakout aggressively, that's the only way you would have gotten involved. So it's important. You got to be realistic with it as a trader. We have so many traders that see stuff and they just make it, oh yeah, Akil, I would have traded right here. Why? Why would you have traded right here? If you didn't see the outcome, would you have still traded right here? Right? You guys ever see those traders? Right? Where it's like they show you something in hindsight and it's like, yeah, I was watching this Bitcoin head and shoulders. Where did I get involved? Right here. Why? Because that's the point right before the breakout. And it's like, yeah, okay. That's the difference between, yeah, Alejandro said we've all been there. Yeah, that's the difference between backtesting and real life trading. And backtesting, you click by and you go back and like, oh, no. I would have gotten in here. Yeah, look at that. Matter of fact, right at the end of this red candle, I would have gotten at the close of this red candle because it was red and it was, it looked good. I knew it, right? In real life, you would have missed this. And this is why these delusional traders, they fake their way through testing, or if they're even doing testing, probably not. They fake their way through kind of the developmental process, and they go live, and they don't realize that there's no hindsight in live trading. You miss it, it's gone. Or worse, you miss it and you're late to a trade and then you lose. So my suggestion, if you're a new trader, just be honest. There's nothing wrong with identifying this and asking yourself, how could I have gotten involved? And looking at this and being like, okay, well, is there anything that I learned? Is there any higher high, higher close, or jot down ideas like, okay, maybe if I do this, was the right shoulder doing anything? Right? Nothing wrong. I suggest you do that, not even as a new trader, but as a seasoned vet. I always go back and review opportunities like this and be like, hey, if I were super aggressive, how could I have gotten involved? Because that's how you learn and develop and evolve. But Be real. Sometimes you got to look at something and say like, yeah, that was a great move, and just there's no possible way I would have caught it. And that's just the honest truth of trading. Real quick. And this is the bat that Justin was looking at. Nailed it. Nice. Keel, quick question, if that's okay. How many pairs should I backtest to know my strategy works across all major pairs? First, I would suggest backtesting across more than major pairs. I think you're going to find that most of your non-major pairs are going to be better for trading than your major ones. It's kind of weird that way. But there's no minimum. I mean, you can be very profitable trading one pair that works. You can be very profitable trading 20 pairs that work. So there's no minimum. I know traders that successfully trade a single pair and that's all they trade. And they've been doing it for years. You can be very successful. I know traders that have traded 20 pairs, 20 plus pairs, and be very successful. So there's no minimum. There's no maximum. You just look at what your numbers say. If your numbers say 10 work, then maybe you trade 10, or maybe you take the top 5 out of those 10. If your numbers say 2 work, then you got a 2-pair portfolio, and life is pretty easy for you with a 2-pair portfolio. Trust me. So no minimum or maximum. So, all right. Any other questions on Bitcoin here, guys? Back test until you get the answer. I think that's another one. There's no quota. There's no quota. We don't have to trade a certain amount of pairs. We don't have to trade a certain amount of strategies. Right? You literally take what the market gives you. You literally take what the market gives you. If it happens to give you 10, it gives you 10. Gives you 3, and you got 3. Yep. But backtesting will give you your answer, and then you can narrow it down per your preference, both frequency-wise and both profitability-wise as well. And that's the cool thing about backtesting is you get your number, and then you can literally say like, hey, I want only the best of the best, or maybe I want to add this one because it smooths out my equity curve. I've got a few pairs in my portfolio they're not great pairs at all, but they're simply there to smooth out equity curve. They're simply there because they don't do, they're just steady. They're not great performers, but they're steady. So in times of drawdown, they help me keep my head above water. And in times of expansion, they don't really damage me. They're just steady. Those are very important. It's kind of like, daily sports reference, right? If you have a team full of superstars, right, you're probably not going to win. You got too many superstars on a basketball team. There's only one ball, right? You need steady players. You need that player that's going to be under the radar, just plays good defense, makes a couple threes, stabilizes, right? You need that holding midfielder that doesn't care about scoring, but he's always going to be in the right defensive position, right? If all your midfielders are attacking, right, you're going to be exposed. You need that pitcher, that relief pitcher that's just going to get the job done, just going to buy you a few innings until your closer comes in. Right? You need that tight end, that old school Jason Witten tight end that doesn't do anything all game, but when you need a 5-yard reception, he'll give you one. He'll make it. He'll make that 1 5-yard reception a game. That's important. Get you a first down. You need those steady Freddies on your team. They're important. So cool stuff. Thanks for the questions, YouTubers. We're probably going to do the same thing all week. I don't expect anything to change. So we're probably just going to, so if you're coming on to the live stream tomorrow, bring an idea and it may get looked at. But do me a favor again. I gave you $1,000 lesson today, thousands of dollars of lessons today.